Massive wealth transfer is getting teed up right in front of our eyes, right as I speak, and it should come as no surprise. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is the 22nd of July. We're, I guess two-thirds through almost three-quarters through the month. Time does fly when you're having fun. So many things are going on in the real estate world right now, you just can't keep up. We'll talk about it in a second. I think things are really starting to open up and the stage is getting set for the future. Now, part of the future is all the pre-foreclosures and all the distressed properties. So if this is something you're interested in, go to gethousingdata.com. That's gethousingdata.com. This is my affiliate relationship with foreclosure.com. They're the number one provider of distressed property listings in the U.S. Check out gethousingdata.com to see what's going on in your neck of the woods. All right, so what we're going to talk about today really is the hedge fund stuff. So get this, Blackstone prepares a record $50 billion, okay, $50 billion, 50 billion to snap up real estate during the coming crash. So the past 2 months, there's been a barrage of negative news coverages focusing on the U.S. housing market. So we all know that. I guess negative depending on your perspective. We all know that, changes are coming, whether it's a crash, correction, reset, whatever. Again, let's go back in time. What did the Fed say? The government actually said that the housing market needs to be reset, and the Fed is actually resetting the housing market with respect to rising the mortgage rates or the interest rates that reflect in the mortgage rates. So basically, which is predictable. Basically saying here the mortgage rates soaring at the fastest pace on record to decade highs, sending U.S. home affordability to its lowest in history. Only a handful of the 1% can afford the American dream. And here's the thing, everybody. There really no longer is an American dream. Why? Because housing's no longer a dream. It's a commodity, right? It's an asset-based commodity that people want to get their hands on. And for whatever reason, monetize, cash flow, fix and flip, whatever that is. But housing really is a commodity right now. So alas, it also means that just like in 2007, a housing crash is now a matter of time. So what they're really saying here is that when you've got these big hedge funds like a BlackRock who are, poised to take advantage of what's going to happen in the future, you can kind of guarantee that's probably going to happen. So once housing craters, the largest U.S. residential and commercial landlord, private equity giant Blackstone, is about to get even bigger. That's when it will deploy some or all of the record $50 billion in dry powder. So dry powder is a common term in Wall Street vernacular, I guess you could say, talking about money that's waiting to get fired out of the cannon and spent. So they're accumulating money. They got lots of it. They're ready to go. They're waiting for this to happen. So Blackstone is in the final stages of raising a new real estate fund that would set a record as the biggest vehicle of its kind, defying market volatility and a crowded landscape for fundraising. So basically, they got tons of cash, and they're prepared to deploy it. How are they going to do it? Well, they're going to buy up foreclosures. They're going to buy up distressed properties from other wholesalers, other groups. They're going to go directly to the lenders and buy up their distressed assets en masse in what's called massive, non-performing notes or pools, etc. So a lot of stuff going on. So with all their funds that they've been able to raise for the past couple of years, they will have a war chest of more than $50 billion to do so-called opportunistic investments, which tend to be higher risk deals with potential for higher returns. So this is where that's actually a signal towards us, basically saying they're going to roll the dice because they know that if they work in some of these markets and pick up things, foreclosures, whatever, they're going to bid, and they'll bid it up because they know that stuff will happen. They'll still get it cheaper. There'll be more upside, et cetera, et cetera. So we're going to see just more than Blackstone here. They will compete. Others will compete as well, too. So more people are they're ready to go. They're going to move into the sector where we play, and try to grab all those deals. So what we're doing is we're being put on alert. This is a warning. This will only get more intense as time goes on. What is the issue with this? Well, it means less inventory for us. It means less inventory coming to market that's cheaper to push prices down for us. And this basically means we have to be a little more innovative and beat the Blackstones and other hedge funds, beat them to the deals which means we have to get down to the consumer level, the customer level. So that's what we're doing. That's what my business is all about, is we want to reach out to the homeowner who's in distress prior to having these guys pick it off at auction. There's deals to be had. Every foreclosure sold at an auction could have been a transaction or a short sale. Simple as that. So please keep that in mind. So again, according to the Wall Street Journal, this could allow the firm to take advantage of a downturn in public markets. Translation: a time when Americans are liquidating their housing en masse to shore up liquidity. When the bottom falls out from the economy, Blackstone will step in and buy all the distressed properties at pennies on the dollar, becoming an even bigger presence in the U.S. and global real estate. So this should not come as any surprise. We're talking about it up front now. This is really, as I said, putting us on notice that this is going to happen. They've done it before. They'll do it again. And I can tell you that back in the last housing crisis, more towards the tail end, we actually sold a lot of our short sale deals to Blackstone, to Waypoint, to America Home for Rent. So because they were ready and available cash buyers, they weren't haggling over price. They were going, great, we appreciate the work you guys do. We can buy it and get on it right away. So, what I'm saying is you don't have to fight. You can't fight the power in this case, all right? You cannot fight this power. So you have to learn to accept that they're going to be part of the marketplace and part of the real estate environment. But you look and figure out how you can sort of worm your way and take advantage of where they can't go. We're more nimble, feet on the street, to get deals, whereas they're buying en masse, they're buying in pools, they're buying at auctions, they're pointing and clicking, whereas we're dealing with people at the consumer level. That's the difference. So essentially, the firm as a whole has almost $300 billion in real estate, and it's going to target specific areas of the economy where growth is outpacing inflation. Those areas are warehouses used for e-commerce. They do a lot of warehouse stuff, which would be Bitcoin mining, things like that, data centers, etc. They do a lot of those type of properties. Life sciences, office buildings, rental housing, and hospitality tied to travel and leisure. So rental housing, number one, they will basically become the largest U.S. residential, well, they are right now, but they'll even get bigger, the largest U.S. residential landlord renting, leasing houses. Some of the travel and leisure, think about Airbnb. Think about all the people who bought properties at the peak with mortgages to work their Airbnb because the numbers made sense at the time. What's going to happen to all those people? Are they going to face foreclosure? Are they going to give up their property? So you can see how all this stuff is being poised to change. It's going to disrupt the market on a pretty significant level. So essentially, again, they charge tens of millions of Americans who dutifully pay for the privilege of having a roof over their head. So if these guys can do it, we can do it. We can be a little more nimble. We can sort of be at the consumer end and sort of jump on stuff as fast as it's available. So I'm not scared of these guys, but they're a known commodity. We have to sort of plan our operations and our strategies around what they're going to be doing, but also utilizing them as a cash source, as a vend source. In other words, have a property, bring it to the Blackstone, to the group, bring it to America Home for Rent. Utilize them for the opportunity to cash out on properties. It may, because as I can tell you from experience, they pay cash. They're not going to haggle over inspections and things like that. Chances are they're going to rehab or spruce up the property anyway. So they know what they're doing. Good, solid buyers take advantage of that situation here. So, by the way, guys, if you're not a subscriber and you appreciate the information I produce, please do me a favor and hit that subscribe button. I really appreciate it. And also, if you think you're a subscriber, could you please double check and hit subscribe again, because I lose more than I put on. Thank you very much. All right, let's talk about this. So, that was on the Zero Hedge website, so that's where I picked off the article. If you go down and look at the comments, this is kind of important. I do want to thank Carl for actually pointing this out to me today. I would have actually got to it because I have a subscription to Zero Hedge, but he actually found the this quote, what I'm going to use here, which is very helpful. So look at what's being written here. So this is commentary on the article of the Blackstone's $50 billion. Just 2 days ago, a friend who lives in Port St. Lucie told me about a meeting with a foreclosure attorney. The attorney had just received a call from a bank asking if his office was fully staffed. All right. He said that it was and asked why the bank was asking the question. They replied that starting in August, they would be sending him 250 to 300 foreclosures per week. So what this is basically telling us is that there is foreclosure volume coming. that they're kind of sitting on it, they're preparing, and it's going to start. So, and this is not the first time I've heard this. All right, that's why I'm putting it up, because I've actually been in a real estate seminar where I actually have had a guy in front of me was a real estate attorney, and he was same thing. He was on the litigation side. He works with banks and lenders, so he files the foreclosure notices down here in Florida. He's done 20, 25,000, somewhere in that range. His commentary a couple months ago was similar, saying, my business is picking up. It's getting busier and busier. We're seeing more filings that need to be done. He expects, and his comment was, we're not even at the tip of the iceberg yet. It's going to get a lot worse before it gets better. And we probably have 3, 4, 5 years of this starting now, how long this is going to take. So my point, so what is the point in all this, is that, it's time, okay? It really is time. So if you take a look at, what we're talking about here, time is precious, as I'm showing here on this slide. Don't hesitate, don't wait, don't hedge, etc. Time, it's time to start doing this business, okay? I've talked about it for 3+ years now. I've monitored it, as close as I possibly can. I've deployed and implementing stuff to support this business. I want to capture as much as I possibly can this next housing correction, crash, or whatever you want to call it. Everybody can participate in this. It's not that difficult to do. It's about wanting to do it, pretty much. So it is time. So, don't think to yourself, oh, well, I'm going to wait 2 or 3 years till things, hit rock bottom, then I'll buy. That's not a good thing to think about, because you're going to miss deals, you're going to miss opportunity, you're going to miss ways to make money. You can make money on the downturn and on the upturn and at the bottom. All right, because it's just how you do it and what we know how to do. I've been doing short sales the past few months, and we're getting phenomenal discounts from the lenders, even in an up market. Right, so the whole sort of thought process that you can't get this done when there's appreciation is really kind of a red herring. We're getting stuff done, and it's only going to have more volume. More people are floating to the surface. They'll need help. They'll need support. They'll need solutions. People like us that can provide them these solutions. We can help them stop their foreclosure, buy some time in the house, help them settle their debt with their lender, and move on, and then we can help ourselves at the same time. So it's kind of a nice little situation, but realize that it is time now. If you need to learn this, connect with me. You want to know more, connect with me. Want to get involved, connect with me. It is time right now. So for those of you that are sitting on the sidelines, time to get into the game. I mean that, with all earnest and honesty right here. So anyway, I just want to do a quick video for a Friday afternoon. I know people are traveling, summertime, stuff on the go, but this is important. So what we're seeing is that every single thing that we hear in the news now with respect to housing, we're seeing less and less and less rah, double-digit appreciation. Let's go. Keep buying that house. Now we're seeing more inventory, no more bidding wars, sellers dropping prices, high interest rates, less buyers. Oh, now we're starting to see some of the foreclosures manifest. Oh, big real estate investment hedge funds are licking their chops, waiting to jump in on that. Okay, so you can see that from 6 months ago or 9 months ago, from a year ago, the perspective has changed 180%. Okay, it's basically flipped. The script has been flipped. Now we're talking housing crash, housing bubble burst, the whole bit, as opposed to what? Everything double-digit appreciating. All right. Yes, certain metro locations will still remain strong, but they're still going to have all their underlying tendencies. Right. Look at Phoenix. Look at where we are in Tampa. Look at other high-performing markets. They have an increasing number of pre-foreclosures, which tells me that's an imbalance as to what's going on in real life and the economy versus an overinflated and controlled, manipulated real estate and housing market. All right. So there you go. Thanks again for the views, likes, comments. Please share the video with your family and friends. Reach out to me if you want to talk. If you're not a subscriber, please subscribe. I look forward to speaking with you early next week. Have a great weekend.